$7 trillion have been printed since the start of the pandemic in order to stimulate the economy. That's 22% of every US dollar ever created happened this year alone. And this year is not even over. And now we're going back into further lockdowns. I hope you see where I'm going with this. Interest rates are at 0%, so cash isn't an option either. And neither are bonds, in my opinion. So stocks or real estate. But real estate's for another day. Let me stick with what I know best, and that's stocks. And the great debate between value versus growth. Just a disclaimer, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. All right, let's get into it. Now, I'm a huge lover of technology companies. I've had times where 100% of my portfolio has been in either, I don't mean one of these stocks, but in a collection of either AMD, NVIDIA, Apple, Tesla, Amazon, These are great companies that at one point I found very undervalued. Today, I can't really say the same thing. I'm not going to get into a long discussion about how they're overvalued, but in my opinion, that's what I see today. Warren Buffett has always said, be greedy when others are fearful and fearful when others are greedy. And this is the way I've always looked at the stock market. So when I see my favorite sector take off into prices unimaginable, yeah, it's great for only so long. Eventually, you have to realize that these prices won't last, and eventually, you're going to have to take your chips off the table. But yeah, the potential of earnings is there, but it's starting to look a whole lot like 2001-ish, like Pets.com, whenever you look at a company like Nikola that is taking off into some $35 billion valuation with no earnings. It's crazy. But now let's remember, be greedy when others are fearful. Where is this fear? Travel, hospitality and leisure, airlines. No one wants to touch it because it's got disaster written all over it. But that's what I love. Before I get into the next part of this video, I wanted to show a great indication for overvaluation in the stock market, and that's PE ratios. The price of a company divided by its annual earnings. Average PE ratios on the S&P 500 throughout time has been about 14 times. These days, it's about 35 times. You can see on this chart and the other two times that the price in the stock market has been this high. 2001, and you guessed it, 2008. Well, whenever we look at companies like Tesla, AMD, Shopify, Zoom, and a whole bunch of these other companies with PE ratios in the hundreds, where are all the glowing opportunities left in the pricing of these stocks? How can you justify buying at prices like this? Because at the end of the day, we're buying for the price to go up because we think that it's worth more in the future. But how long is that future? Is that future 10 years for you? I mean, you have to justify Tesla being worth $400 after a 5-time split. Anyway, you're really only left with two options in a stock prices evaluation whenever it comes to these crazy growth companies. You either have to have the price of the stock lower back to normal regular valuations and the price of the stock stay unmoved during years of growth, which wouldn't happen, or continue the climb with growth and keep the volatility at extreme highs and, risk the collapse. Now, if you were to have these stocks at great prices before their respective booms, then yeah, that's great. I respect it. But for new money coming into the market, it is always advised that you position yourself for companies that have already taken their hit or for companies that haven't boomed yet. I love Tesla as a company, but there is no way I can justify a price that it's at and see potential for any short-term growth at all. During times of high uncertainty, dividend stocks are a huge run-to for people due to the payments that people are going to get during even the bad times. Now, dividends aren't guaranteed, but certain companies have set themselves up to show that even in the worst of times that they won't ever cut their dividend. AT&T is a perfect example of this. Not only have they paid their dividend for a long time, but they've also increased their dividend every single year for the past 36 years. And that includes years like 2001 and 2008. Today, they're paying a 7.5% dividend to their shareholders. And yet, the price of the stock is 30% lower than before the pandemic had started. I'll have to make some individual videos regarding some of the stocks that I've been looking into and ETFs, but some of them that I have in mind are Kraft Heinz, Enbridge, Jets, and a couple others that I got. Anyway, well, that's for a later date. There are so many reasons to choose value over growth during a time of an economic uncertainty, whether it's the discussion of need versus wants in the economy, the idea that people won't choose to upgrade their iPhone when funds are limited, but they still have to buy food, their clothing, pay for their homes. But even if it doesn't come down to a disaster like that, I think new money coming into the market is still looking for great deals and opportunities. I feel as if a lot of the growth stocks that people have been looking into have been squeezed a lot. And I don't see a lot of more opportunity in their pricing. But a lot of North America's great businesses have huge discounts due to fear and COVID shutting them down. But the truth is the way that our stimulus is going is that I don't see any of these companies falling to bankruptcy. They're going to get held up by Jerome Powell and his beautiful Federal Reserve. And hey, while we wait for a second pandemic wave, we can sit on our companies and enjoy the dividend checks while we wait for the stocks to go back up. And I'm okay with that. I hope you all enjoyed this video. If you did, give it a like, share, subscribe, whatever, the comments, the regular stuff. You can even comment what stocks or topics that you'd like for me to discuss in the future. I have a couple in mind and I'm just getting started, but just a reminder before I go, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we spoke about today are in any way my recommendation. This is merely my opinion and you can choose to do what you with this information. Ugh. Anyway.